You might be saying to yourself, I already own a home, how is that making me richer? I'm worried about the rental game. Land, how does that make us money? What's happening, everybody? I'm Huddy, and we're talking about how taking on good debt can make yourself richer. I'm gonna use myself as an example so you can see exactly what I'm doing to increase my cash and making myself long-term wealthier in the process. Specifically talking about owning properties. Not just a primary residence, but also investment properties and potentially even looking at land. You might be saying to yourself, I already own a home, how is that making me richer? I'm worried about the rental game. Land, how does that make us money? Owning a home is one of the best ways to make yourself wealthier. If you already own a property, you might be asking yourself, well, great, how do I get money out of this? Or you're maybe thinking about getting into the rental game and not sure how to do that. Or you've thought about buying some land. So we're talking about taking on good debt to make ourselves wealthy, which is home ownership. Even if rates are up, it's still a great way not only to make yourself wealthier, but to battle inflation. So if you're thinking, well, that's great, but I'm a little nervous about the real estate game, or I'm not sure because you're renting, maybe you're in a lease and you haven't really thought about it because you're worried about the market crashing, I cover that in another video, but for now, let's talk about taking on this debt and making us wealthy. For example, if you bought a home for $300,000 and it only appreciated at 5% over 2 years, the new value of your property would be $330,750. So that means you're up in equity by over $30,000 just in 2 years. If you were renting for those 2 years and maybe say you're paying $1,800 a month, well, now you've just paid a landlord $43,200. So your interest rate on a rental is 100%. So if you think about that turn, that's a big difference. It's a $74,000 flip in money, meaning the difference between how much that home appreciated versus what you've paid in rent. That is big dollars. So looking at that equity, you could access it using a home equity line. That's a potential way you could have money in reserve in case something does happen with the economy or with the housing market or just all of it. Think of it as a piggy bank. The other thing that you could use with some of that equity is maybe buy a rental property. I bought one a couple of years ago and it's doing really well for me. I have a payment of about $500 on it. I did put some money down and it's a smaller rental. I paid $100,000 for it and I'm getting over $1,000 a month in rent. So I'm cash flowing just over $600 per month every single month. Not only that, when I bought this property, it was in a little bit of disrepair. Not a lot. There was nothing wrong with it foundationally, but it needed some paint and some updates. So I spent $5,000 to get this house ready and get it updated, and there are still some more things that we're doing, but the new value came on that property at $135,000 in a matter of 3 months by buying a rehab investment property. So by now that property, I think last time we looked, it's worth $165,000. I owe about $70 on it, so I have a lot of equity sitting there, plus I'm making cash flow each and every single month. The other thing that I did that you might want to consider if you don't want to get yourself into that landlord game is buy a lot or buy some property somewhere. We know one thing for sure, God isn't making any more land, and you see corporations and builders buying property left and right as much as they can get their hands on. So what did I do? I bought a lot for $50,000 and I'm just sitting on it, just waiting to see what's going to happen over the next 10 years. A payment on a lot, it's cheaper than a car payment. I think I pay $275 a month. You have to check for your own tax situation. I'm not a CPA by any means, but the savings that I have every year from being able to take advantage of a rental property, a lot, and my primary residence is significant comparing it to someone who maybe just rents or only has a primary residence. So again, this is all good debt, and it's a way you can take advantage of potential tax savings, like a lot of them, and you have something that is going to increase in value over the next several years. Depending on where you live, I would factor an average appreciation rate of about 5% a year. So if we're looking at values for that lot that I currently own, purchasing it again at $50,000, maybe it gets 5%, I'm probably up $30,000 to $40,000 in 10 years. And again, I got great tax deductions on it. So those are good ways you can slowly grow yourself richer over the long term and not taking too much risk. If you have any questions, feel free to drop a comment. You can always ring the bell, or for more content like this, just watch the next video. Appreciate you stopping by.